for the Hot Topic Buzz. Florida is pulling $2 billion worth of state investments managed by BlackRock over its commitment to a woke agenda and ESG funding. Governor Ron DeSantis said back in August that he wanted the state to stop considering the, quote, ideological agenda of ESG investment. 3 other states have also recently pulled funding, and now we are seeing these states decide what to do now as Florida becomes the latest to eliminate money in BlackRock because Larry Fink has become the environmental police. Dagen, your thoughts?
Right. So there are these 4 states, but what happens at the state level, you got to look at what's happening at the Biden level, at the national level. So over the Thanksgiving week, the Wall Street Journal editorial board wrote about this. The Labor Department, this was last week, finalized a rule that empowers the retirement plan sponsors to invest based on environmental, social, and governance factors and put your 401k. This is based on ERISA, the Employee Retirement Income Security Act of 1974. You put your 401k to progressive political work. So it basically opens up the door, reversing what the Trump administration tried to do, opens up the door for retirement plan sponsors to kind of add this as part of their investment objective. But I do love this because I've told my Larry Fink story before on this program, where I went to meet with him in 2008, and I was told that I was not impressive, that I didn't impress Larry Fink because I didn't smooch his butt enough. So he's getting bit where the sun doesn't shine, and I'm kind of enjoying it.
You know, Chris, Republicans basically say that people like Larry Fink and other liberals are using ESG, that's environmental, social, and corporate governance investing strategies, to advance this ideology, advance this climate change agenda. And, you know, because BlackRock is the largest money manager, asset manager, more money and more AUM than pretty much the Federal Reserve's balance sheet, okay? And they're voting the shares, but in many cases, the investors who own those ETFs, who own those stocks, may not agree with the way BlackRock is voting. So Florida and these other states are saying, wait a minute, we don't like this, and so they're pulling this money. This is a big deal that Florida is going up against BlackRock. You're an investment manager. How do you see the pressure in terms of going along with ESG?
For me, no pressure at all. I could care less. My job is to go back to the original ERISA. They're doing the right thing, acting as a fiduciary for my clients, trying to bring the best possible performance to them. This tweak that they did during Thanksgiving week is what it is. It's in essence, it's a get-out-of-jail-free card for bad advisors. That's all it is. It's basically saying, hey, you know what? I had poor performance, but that's okay because I invested in green this and I made sure there was enough LGBTQRSs in the board and all of this other nonsense. But it doesn't matter. My job is to manage risk and reward for my clients, not manage this other nonsense.
Yeah, and you know what? The quote from the head of the CFO said, "I need partners within the financial services industry who are as committed to the bottom line as we are, and I do not trust BlackRock's ability to deliver." Who, that's from Petronas, who oversees the Florida Department of Financial Services, managing $60 billion in taxpayer money. If you start seeing more states pull taxpayer money out of firms like this, you are going to see a rethinking of this ESG the way you have as well. It's really interesting to see DeSantis take money out of BlackRock because of this issue, which is only going to get hotter and hotter. We will keep a spotlight on